Welcome to the Deep Dive. We pull the key insights from, well, a whole stack of sources so you get the shortcut to being really informed. Today we're jumping into something that feels a bit like science fiction, but it's getting very real. Urban air mobility, then flying taxis. Okay, let's unpack this. There's been some chatter about Joby Aviation. They're a major player in this eVTOL, that's electric vertical takeoff and landing space. And their stock, it's hit some, turbulence lately. So was that just a blip, or is it maybe something more serious? Our mission today is to figure out what really happened with Joby's stock. What are their latest financials actually telling us? And the big one for anyone watching this industry, is this a dip, maybe a buying opportunity, or are the risks still just too high right now?
It's such an exciting area, definitely. But, it's also inherently tough for investors when you're dealing with these groundbreaking, super capital-intensive technologies like eVTOLs. I mean, you're basically betting on companies building a whole new kind of transport. That takes huge money up front, long development times, navigating all the regulations. So volatility like we've seen, honestly, it's often just part of the ride with this kind of innovation. You kind of expect it.
Absolutely. And that volatility was definitely front and center recently. Let's kick off with the news that got everyone talking. Joby Aviation, that's J-O-B-Y on the NYSE, took a noticeable dip. Around August 18th, 2025, it was down, 3.46%. And then by the 24th, report said it had plunged over 10% just in that week. And it didn't feel like just one thing causing it, did it? More like a mix of pressures hitting them all at once.
You're spot on. It was a confluence, really. The sort of immediate spark was their Q2 2025 financial results, which came out August 6th. They reported a wider loss than analysts were expecting, specifically a $1.41 loss per share.
Yeah.
And, well, numbers like that, they always cause ripples, especially for these high-growth stocks.
Right. And when those numbers landed, how did the analysts react? What did you see there?
They reacted pretty quickly. We saw Canaccord, for example, cut their rating from buy down to hold. H.C. Wainwright shifted to neutral. And even Deutsche Bank, they adjusted their price target, moved it up from $4 to $6, and this is key, they kept their sell recommendation.
Maintaining a sell. That speaks volumes.
It does. It shows a definite shift to, let's say, a more cautious stance on Joby's near-term future. And like you said, it wasn't just Joby's news. The wider market mood wasn't great either. There were inflation jitters from July's producer price index, plus some, frankly, disappointing Q2 reports from big retailers like Home Depot and Target. That made investors generally nervous about riskier stuff.
So Joby got kind of caught in that broader downdraft, too. That definitely wouldn't have helped. But wasn't there also something else? A kind of ripple effect from AI. That seemed to hit growth stocks like Joby, too.
Yes, exactly. That's where it gets a bit more interesting, maybe more subtle. There's this MIT report suggesting something like 95% of businesses haven't actually made money yet from their generative AI investments. Now, obviously, that's not directly about Joby's aircraft tech, but it sort of served as a reality check for investors betting big on future tech payoffs. It highlighted that, even with really cool cutting-edge stuff, getting from the lab to actual profit, that's often a long, tricky road. So it maybe put a damper on expectations for things like, say, fully autonomous eVTOLs way down the line, even though Joby's current plan is piloted. It just added a layer of caution about those far-off promises.
That's a really good point. It's a reminder about the gap between innovation and commercial success.
Okay, let's peel back another layer then. Beyond the headlines, beyond the analyst takes, when you dig into the actual Q2 report numbers, what did they show? Okay, looking at the Q2 report, these figures really stand out. A net loss of, over $324 million, $324.67 million for the quarter ending June 30th. And revenue, just $20,000. Which, as you said, was way below the $1.57 million forecast. That's a big miss. What's your take on those raw numbers?
Well, the numbers themselves are stark, but the context is, I think, really important here. Their total operating expenses were huge, $167.880 million. Now, look where it went. $136.39 million, the vast majority, was R&D. That's the cost of flight testing, building infrastructure, buying Blade Air Mobility's passenger business. They're literally trying to create a whole new market from scratch. It's not like tweaking an existing product.
Right, it's foundational spending. Exactly. And when you see an EBITDA that's earnings before interest, taxes, depreciation, and amortization of negative $314.81 million,
Yeah.
well, it confirms their core operations are nowhere near profitable yet. Then you add in a price-to-book ratio of 15.85. That compares their market cap to their sort of net assets on paper. A ratio that high definitely fuels those concerns about overvaluation, at least based on current performance. It clearly tells you investors are valuing Joby on future potential, not today's reality.
Which is pretty typical for this kind of disruptive tech play, right?
Yeah.
High spending before the earning really kicks in. But it's always that tension. How long can that burn go on?
Precisely. Though, to be fair, there was a sign of some discipline in there. Joby did actually manage to cut its cash burn by 10% compared to the previous quarter, down to $112 million. And they're projecting total cash use for 2025 between $500 and $540 million, not counting the Blade deal. So they are managing the outflow in a very cash-hungry phase. But yeah, you're right. The analyst reactions we talked about, they clearly reflect skepticism about when the monetization happens. When do these amazing concepts turn into actual, profitable business?
Okay, so that paints the picture. Financial headwinds, investor caution setting in.
Right.
But here's where it gets really interesting, because that's not the whole story, is it? While all this financial stuff was happening, Joby was also hitting some pretty major operational goals, almost like they were building the future quietly in the background.
That's such a critical point. It's that classic tension.
So-
Short-term financials versus the long-term build. Look at certification. With the FAA, they're now 70% complete on their side of Stage 4. That's a big deal. And the FAA's part, over 50% complete now. That's up 10 points just since Q1. And they've actually started final assembly on the very first TIA aircraft. TIA is Type Inspection Authorization. That's the specific plane the FAA pilots will fly for the official sign-off. Joby's own pilots should fly it later this year. Then the FAA pilots jump in to evaluate everything. Performance, safety. It's a massive step towards that final Stage 5 approval.
And what about their choice to certify under FAA Part 23? Why does that matter?
Yes, Part 23. That's the pathway for small airplanes. It sounds technical, but it's actually a really smart strategic move. It gives them a clearer, maybe more flexible path compared to, say, helicopter rules. It also massively increases the pool of pilots they can tap into. Think 300,000 qualified airplane pilots versus maybe 30,000 for helicopters.
Oh, interesting. Wider talent pool.
Exactly. And it lets them leverage existing aviation infrastructure much more easily. They're not reinventing everything. Remember the G1 paper the FAA issued back in 2020? That's basically the rule book for these new eVTOLs. It said, okay, 85% is standard airplane rules, 15% is new stuff for fly-by-wire, the vertical takeoff, the batteries. So there's already a defined structure they're working within. It's not a total Wild West.
That makes a lot of sense. Fit the new tech into the existing framework where you can. Okay, so regulatory progress looks solid, but that's just the U.S. What about globally? Are they pushing hard elsewhere too?
Oh, definitely. This isn't just a U.S. play for them. Their global activity is actually pretty impressive. This summer, they did 21 full transition flights over in Dubai. That was basically kicking off their commercial readiness efforts there. And they were the first eVTOL company to do that.
Dubai, right. They have that big exclusive deal there, don't they?
They do. A landmark agreement from 2024 with Dubai's RTA, the Roads and Transport Authority. It gives Joby exclusive rights to run air taxis in Dubai for 6 years. And they're not just talking about it. Vertiport construction, the landing pads, is already happening. Key spots like Dubai International Airport, DXB, Palm Jumeirah, Dubai Marina, downtown, they expect those to be ready by early 2026. They're projecting a flight from the airport to the Palm in just 12 minutes. That's compared to, what, a 45-minute drive?
Wow, okay. That's a tangible benefit.
Huge. And the goal is first passengers flying in Dubai in 2026. Plus, they inked a massive $1 billion deal in Saudi Arabia with Abdul Latif Jameel, planning to deploy around 200 aircraft there. And then there's that Blade Air Mobility acquisition we mentioned that gets them immediate market access, potentially, in New York and Southern Europe, plus new deals brewing with ANA in Japan for maybe 300 aircraft.
So they're really laying groundwork everywhere. Infrastructure, partnerships, even buying existing businesses. That's a lot of heavy lifting.
Yeah.
What else? Any other big strides?
Yeah, two other key areas, defense and manufacturing. They've teamed up with L3 Harris to develop a gas turbine hybrid version of their aircraft that's aimed at defense opportunities, low-altitude stuff. Flight tests are planned for this fall, with demos in 2026.
Defense contracts.
Yeah.
That's often a good way to get early revenue and testing, right?
Absolutely. Joby already has over $40 million secured from the Department of Defense, with another $100 million plus potentially in the works. It's great for testing advanced tech and helps de-risk the civilian certification, too. On the manufacturing side, they finished expanding their plant in Marina, California. It's now 435,000 square feet. The goal there is to double production to 24 aircraft a year. And their renovated facility in Dayton, Ohio is coming online too. That'll handle components, testing, eventually aiming for up to 500 aircraft per year from there.
500 a year, that's serious scale.
It is. And underpinning all this, remember, they ended Q2 with nearly $1 billion, $991 million in cash and short-term investments. Plus that crucial $500 million strategic backing from Toyota, which isn't just money, it's manufacturing know-how.
Okay, so putting it all together, the shaky financials on one side, these major operational and strategic wins on the other, what does it mean for the big picture? How does Joby stack up in this whole urban air mobility vision?
The market potential is just wild, isn't it? It really is. The numbers thrown around for UAM, some say $300 billion, others over $500 billion. I've even seen projections hitting $2 trillion by 2040. It's driven by, well, obvious things. Cities getting more crowded, traffic getting worse, and this big global push for sustainable zero-emission transport. eVTOL seem perfectly placed to tackle that.
And within that massive potential market, Joby has some pretty distinct advantages, I think. First, that first mover edge you mentioned. 15 years of engineering, over 40,000 miles flown in testing, more than 1,000 full transition flights. That's a deep well of experience. They were the first eVTOL company to get that G1 certification basis agreed with the FAA, the first to get airworthiness approval from the Air Force. In new markets, that kind of head start can create powerful network effects, kind of a winner-take-most dynamic.
Okay, so experience counts. What else?
Their business model is key. It's vertically integrated, a bit like Tesla. They design it, they build it, and they plan to operate it themselves. They're aiming for recurring revenue from flights, not just selling the planes once. Their projections show pretty attractive unit economics, high contribution margin per flight, potentially paying back the cost of the aircraft in about 1.3 years, looking at 2026 estimates.
Interesting. So operate, not just sell.
Right. And the aircraft itself seems well suited. 150-plus mile range, 200 mile per hour top speed, pilot plus 4 passengers. That hits a sweet spot for economics. And crucially, 0 operating emissions. Plus, it's designed to be quiet. They quote 65 dBA at hover. Now, decibels are logarithmic, so that's roughly 100 times quieter than a typical helicopter. That's absolutely massive for getting public acceptance in cities.
Wow, 100 times quieter. That is a game changer.
Huge. And the fact that it's piloted initially, that helps with certification hurdles and building public trust right now while they continue developing autonomous tech for the future.
So it sounds like a really thought-through approach. The tech, the business model, the quietness. How does this stack up against the competition people hear about? Like Archer, Lilium, EHang, Eve.
Yeah, the competitive landscape is important. Joby is generally seen as being further ahead in the FAA certification race compared to, say, Archer. Some analysts have described Archer as being kind of stuck between step 1 and 2 of that process, with Joby's well into stage 4. Joby's founder, Joe Ben Bevert, also gets highlighted for his deep engineering roots and long-term focus, which some see as a contrast to leadership at other firms. You have others like Lilium, based in Germany, using a different tech-ducted fans, almost like mini jets in the wings. EHang from China is focused purely on autonomous single-passenger drones, which faces a much tougher, more uncertain regulatory path, especially in the U.S.
Right. Different approaches, different hurdles.
Exactly. And don't forget Joby's partnerships. Toyota for manufacturing scale-up is huge. Uber for potential customer access, integrating with their platform, and the DoD for that advanced testing and validation. These aren't just logos on a slide. They seem like deep working relationships that really help de-risk things.
Okay. Now let's really get down to it. For you listening, maybe thinking about this sector, given everything, the financial bumps, the big operational wins, the market buzz, is Joby Aviation right now looking like a buying opportunity after that dip, or is it still just too risky? Let's lay out the risks first. What are the big ones?
Okay, risk number 1, undeniably, is cash burn. We talked about the losses, the projected $540 million cash use this year. It's incredibly capital intensive. Profitability is not right around the corner. Number 2, regulatory hurdles. Yes, progress is strong, but FAA certification is notoriously complex. Any unexpected delay could push back commercial launch timelines, and that would definitely shake investor confidence.
Makes sense. What else?
Market adoption and pricing. Big questions remain. Will the public embrace flying in these things on a large scale? And can Joby operate them at a price point they're aiming for cheaper than an Uber Black ride per mile that actually attracts mass demand? That's still unproven.
Public acceptance is key.
Absolutely. Then there's competition. The space is crowded. Joby has a lead, yes, but Archer, Eve, Lilium, others, they're all pushing hard. It's not a guaranteed win. And finally, that AI dependency, or at least the perception of it. Even though they're starting piloted, long-term value is tied to autonomy. That MIT report casting doubt on near-term AI profits could weigh on the stock if autonomous flight seems further off than hoped.
Okay, that's a clear-eyed look at the challenges.
Okay.
Significant list. But, as always, there's the other side of the coin. For every risk, maybe there's a potential reward or something that lessens the blow. What makes Joby potentially attractive despite all that? What are the counter-arguments?
Well, first, that financial runway is strong, ending Q2 with nearly $1 billion in the bank, plus the Toyota backing. They have significant capital to fund operations through to their planned commercial launch and beyond. They're not running on fumes.
Okay, cash cushion is good.
Very good. Second, the regulatory momentum is real. The FAA making progress on their side of the work, Joby flying the TIA aircraft soon, that Part 23 strategy, it makes a 2026 commercial launch look increasingly achievable, not just a hope. Third, that global first-mover advantage, the exclusive deal in Dubai, the operations starting there, the Saudi deal, the Blade acquisition, they're building a global footprint and operational know-how that competitors will have to chase.
Real-world operations, not just prototypes.
Exactly. Fourth, diversifying revenue streams. That L3 Harris defense collaboration opens up a potential $10 billion defense market. That's not just extra cash. Don't discount the big tailwinds. Battery tech keeps getting better, historically around 5% energy density improvement per year. Plus, the macro trends. Urbanization, gridlock, the political push for green tech like Biden's EV funding. These all create a favorable environment for zero-emission air travel. Oh, and one last point. Historically, Joby's stock has shown resilience. Data from 2022 onwards shows it recovered about 70% of its losses within 30 days after previous earnings misses. That suggests investors have tended to look past short-term bumps.
So you can really see it's definitely not a simple thumbs up or thumbs down situation here. Joby's story is this mix, this dynamic blend of real financial pressures and, frankly, pretty remarkable progress on the ground and in the air.
Absolutely. And investing in something this pioneering, like eVTOLs, it just demands a long view. You have to accept that volatility is going to be part of it. The key things to watch now are, can they keep executing on scaling up manufacturing? Does that FAA progress continue smoothly? And critically, what does real-world market adoption look like when they launch in places like Dubai?
So ultimately, the question for you, our listener, is how you weigh those things. The immediate financial numbers versus the truly transformative potential. A future where these electric air taxis are just part of getting around the city. The vision is incredibly compelling, no doubt. But the path to get there is still under construction, quite literally.
Which leaves us with a final thought, doesn't it? Is Joby just hitting an inevitable, maybe even necessary, stumble on its way to potentially dominating this new market? Or are we still, maybe, as Peter Thiel famously wondered about technology in general, waiting for that truly disruptive future we were promised? Something to think about as we all keep watching the skies.